All right, welcome to another episode of the Round Table Talk. We got a couple more people on stage. We got David Knight with us this Sunday, and then we have our usual Perunga. We got Fridge Financials and New Fish Big Pond. Um, let's see, Jackson AI. Oh, what's up, Jackson? Yeah, we're recording this. It's 1 a.m. and I'm about to sleep. Hey, definitely get your rest. You know the market gonna be here bright and early in the morning, so um, definitely need you to be rested for this. And everybody else that's in the chat, Puppy Noob, Glam, Ring One, Thai School Dropout, Art Lives, Will, Mr. Taco, what's up? Mr. Galaxy, what's up? Hope everybody having a good Sunday so far. See, got just about everybody that we gonna get. Mirage just hopped in. What's up, Mirage? Salute, salute, salute. So my fellow members that's on stage with me, what's good? How y'all feeling this Sunday?
Man, I'm happy to be back.
Definitely,
Happy to
definitely.
be back.
Fridge, what's up, man? How you feeling?
Yeah, man. Happy to be back another time. Me and Parunga just did the quiz trivia thing yesterday, which I think went really, really well. I'm excited for the market to open up again this week. My Leap options I bought into last week after our previous podcast recording so far, sitting pretty nicely with the news from Friday that we'll talk about, I'm sure, later on. But so, yeah, sitting pretty nice so far.
Definitely, definitely. Who else do we got? David, Mr. Knight, how you feeling,
Yeah.
bro? You here?
Hi. Good evening, guys. How you doing? Yeah, I'm
Doing good,
here.
man. Man, good to have you. Good to have you. Fridge and
Thank you.
Perunga, man. How did the trivia night go? Like I was able to sit in for a little bit, and then I had to step out, but how was it?
I thought it went well. Uh, I think Fridge agrees here. Yeah, it was fun time and good educational content. I think for everyone.
Yeah, there was a lot of. I mean, we had I think at least like six, seven people at least tune in at one point. For the first one, which was pretty awesome. And a lot of people said that like they were just like, I had no idea that this was even like a thing in the market, or I had no idea this was a thing about bonds and stuff like that. So there was a lot of people who were saying that they learned a lot, and it was a fun time learning and hearing me and Perunga kind of explain things. And at the end of it, even after the recording was done, I was talking to them and I was like, this is what makes the kingdom different. Is that we don't just have a Discord where just calls out trades and you just like pay to get the trade call outs and that's it. You pay to get the knowledge and get access from a bunch of different people who have a bunch of different expertises in stocks, options, cryptos, you name it, whatever. And that's what makes us stand out as the Kingdom University. I know you dropped the Kingdom University, and part of university is education, right? So,
Facts.
people were loving that they learned so much. It was fun. A lot of people were answering questions and asking questions and stuff like that in the chat. And me and Perunga were bouncing off ideas and kind of to explain some stuff. A lot of people wanted to come back next week, so it seems like it might be hopefully a weekly thing. Royalty, which I think is going to be amazing for the kingdom and kind of make us stand out, compared to the other discords that just pay for trades. This one, you're not paying just for the trade, you're paying for literally the educational understanding to give you the tools to be financially free and not just, work your whole life kind of thing. So, I think it worked out really, really nicely.
Facts. Facts. And when you guys came up with the ideal and everything, I just thought that's just something just that like a weekly thing that's going to be a game changer, for like you said for the Kingdom University. So, um, I think it's just the beginning of what we're going to be able to bring with that. But I appreciate you guys for stepping out and then adding a new level to the whole university uh, thing. So I want to say I appreciate that, man.
Yeah, man, absolutely, dude. As someone who's an educator, I love teaching anytime I have a chance to do so. So the fact that I'm able to do it, even on a Saturday, and just bring financial content to people and also financial education and understanding, really does make a difference. And then when you see people who are like, "Oh my God, I learned so much," like that's the feeling that you love to feel as an educator, not the pay. It's definitely not for the pay. I can tell you that right now. That you get
Okay.
in any public school system is never for the pay. A lot of people that are teachers don't do it for the paychecks. They do it for the feeling and the gratification of helping somebody make a difference in the world and educating them and push them to the next level and watching them grow. Like that's what we do, you know. So the fact that I'm able to bring that kind of mentality to the Kingdom University, that's what just makes it, you know, 10 times better, you know.
Facts. Facts. So, hey, that's definitely a good point to teach on. What to bring attention to is just how it is just to make our members better. You know, it's a genuine feeling. You don't want to just have people that's in your group and they just rely on signals. You want them to be able to understand. I think David just did kind of a class session the other night, you know, teaching his strategy. But you know, you want to be able to teach your group why you're taking what you're taking, you know, how to identify different things, and then that way, you know, the more eyes is able to see different tickers, the better, especially if they understand why they're taking our trades. So just imagine, you know, not only us calling out signals, but the people that we've worked with, you know, calling signals and posting charts and giving some solid due diligence on what they're taking and why they're taking it. Bro, it's a never ending cycle of money. Never ending cycle.
Yeah, yeah, man, for sure. I mean, I'll give you an example. You know, like, so one of the questions that Prunga and I talked about was ADRs and what an ADR is when you see it on like a stock ticker, right?
Hmm.
And you know, some people weren't even aware about what it stands for, and it actually makes a huge difference because, for example, like Novo Nordisk is an ADR traded company because they're based off of in Norway. And so the point in time when the stock fell 20%, they announced, you know, their growth changes and the growth guidance for the numbers in the future and stuff like that. You know, it went down 20%, but you look at the American ticker for it, their earnings weren't in for another week or so afterwards, the American like side of the earnings. So they already had an earnings announced in Norway and they weren't good and the guidance was cut and then it came down like 15-20% because of it. And people were like, what's going on? And then it was like, how is it earnings? Earnings are next week, but that's the America's you know,
Right.
like version, I guess, of it or something like that. So just bringing that kind of knowledge, you know, really does make a difference. You know, so for anybody who is tuning into this, you know, we're going to be hosting it every Saturday, hopefully. I think Parung and I are going to put a poll probably at some point to figure out kind of what's the best time. We did 1 p.m. Eastern, and we got a decent amount of people, but we'll do a poll on Saturday for Saturday again and see what everybody likes. So we can get the most people possible. And then if you're cool with it, you know, I know we gave away a free month of the Kingdom, so to the winner last week, yesterday. We'll figure that out, obviously. But if you're cool with still giving out, you know, a free month, dude, then you know, we'll keep giving out like prizes like that. And if not, we'll give out like merch or something like that. We'll find things to give out to people as always for
Oh
winning.
yeah. Hey, the merch is definitely coming soon. I've been talking to Tron. He's been texting me, keeping me in the loop with things. So definitely keep your
Mhm.
eyes out for something like that. That's definitely gonna be in the works pretty soon. Pretty soon. So, um,
Yeah, man.
what I'm gonna go ahead and start off with, like I said, I'm always give my little heat check on the spy and the cues. Give my little due diligence, and then from there, Fridge, if you see any like red folder, anything important that we probably want to draw attention to, Fish or
Mhm.
anybody else, you guys want to hop in on the like the red folder events, the anything that might be going on as far as drone power goes or anything that we might want to pay attention to, you can definitely fill in with that, and then we'll see if what I see could possibly match up with what you guys are seeing economically. So, as far as the spot right now, I posted the a pre-market analysis, which I haven't done that in a good little minute, but it felt good doing it. I think I'm gonna start doing that just to give everybody an ideal of what where my headspace is going into each and every day, like I used to. Everything remained bullish as far as what I was seeing. So right now I'm on a 30-minute time frame, and let's look at the 4. I'll take it to the 4 hour 4. We've seen another recovery as as far as that goes. I done lost one of my tools. We've seen a nice recovery here, and then we've seen one here. And the thing is, you normally see these little motions shoot straight to the upside, and then you see a drastic sell off afterwards. So we're going to probably see that pretty soon again as we retest the 646 level, which we've had some problems breaking above that. This could have been a nice little drop off to accumulate some more buyers to make the shoot back up to the upside. The overall target that I'm watching for is the 652 zone. Above 646, it's a little dangerous. You know, we could see some false breakouts as it attempts to continue to push toward the 652 level. But the same way we saw prices roll over here and then it recovered back up, and we've seen another sell off here. Now we're looking at possibly seeing that next jump to the upside. Once it can hold above 646, we'll see the next level push up to like this 652 level. So that's my idea of what we want to watch for as far as the spot goes. I think it's still healthy. I think the pullbacks we've been seeing, the red days that we've been watching, has been healthy just because we had such a dramatic price, push right here for damn near the whole month of June, half of July. We just saw a very dramatic price increase in the spot, squeeze to the upside, and at some point it has to breathe. It has to take a deep breath and come down here and drop down before it squeezes back up to the upside, and we could be in the process of seeing the next move. So even if we do see a red day or a series of red days, from an overall perspective, as far as right now, I think that we can still make some more moves to the upside, up to 652, and this is over possibly the next month or so. So I'm just going strictly off of this. This doesn't have any of the news or anything priced into it. I think Nvidia does have earnings coming around the corner, so that's going to play a role into the market pulling back or continue to go higher too. It's pretty much a chess match right now. It's a chess match, and we're just gonna have to play the game according to whatever our due diligence is. You just have to stick to it. I know a lot of people have been having hard times right now in the market and trying to keep up with it. Trying to find my little tool that I had, but they say that it's favored. Why is it? Yeah. So right now it's just a way to exhaust retail traders with these crazy moves that is showing us right now. And when you're in the chop, you have to size accordingly, and then you have to either go out long enough on the expiration dates, or you're gonna have to just scalp day to day until the trend actually plays out. So I just jumped to the daily chart, and the reason why I'm jumping on this chart is to show you guys how consistently the prices like to consolidate before it actually makes the move, and that's where a lot of people are getting stopped out, chopped out on weekly contracts. So if we go back to July, towards the end of July, we saw this same type of little, chop zone here in between the 634 and 640. That's 1, 2, 3, 4, 5 days, so a week before the move actually played itself out and it committed to the downside before being immediately bought back up. So going into this month that we're in right now, we've kind of seen the same thing. Is constantly rejecting at this 646. Of course, you're going to get a lot of euphoria in the market. Psychologically, everybody thinks that, all right, this was the load up before the breakout. Once 646 has been touched, if you've been playing calls, you're getting stopped out because it's retracing back or it's not holding up those levels. 20% stop loss, 25% stop loss, or holding weekly calls. The theta's burning you either to the upside or to the downside before it actually commits. So this is one thing that I was talking about last week that we need to do a better job of, which is if you have the appropriate capital, stretching out your expiration dates, even if you don't swing trade it, just being able to hold on and keeping the theta very low and then check makes a difference, because your delta is gonna be fluctuating. But if your theta is constantly increasing because the time is drawn down on when it expires, it's gonna be hard as hell to get out the hole, because it's, whichever direction that you're going, which this past week would have been puts, you would have had to pretty much get that momentum to the downside in order for that theta or that delta to catch up with the theta. So, like I said, everything that's green right now, these are my load up zone. So, of course, orange lines are gonna be my swing high, swing lows. The yellow is when I start paying attention to when to start looking for either a crazy squeeze to the upside or some profit taking. And then ultimately the red line is going to be where I'm looking at a strong rejection at. So, like I said, going into these next few weeks, I'm going to maintain a bullish mindset, even if we drop down like we did see here. Eventually looking for another unexpected event to, squeeze the price action back to the upside. Or if we just get some consolidations or some, like I said, NVIDIA earnings will come around, we may see that drop the price some if NVIDIA drops, or it could just, push the price back up to the overall price target or a little bit higher. But, the news is just going to really play a factor into how fast we continue to make all-time highs. So that's my look on the Qs. The QQQ, in my opinion, it's kind of been a lot more pressure to the downside than the SPY has been. So, and real quick, I'm seeing this just off the color coordination that I make my charts. SPY's already pushed above my swing high, and it's already kind of retesting higher levels, which means the yellow and the red. Qs haven't even pushed back up towards the orange yet. It was making its way up there, but it still haven't pushed that. So this is what contributes to the choppiness also in the market. You're seeing SPY kind of pull the weight and pull most of the weight, and you're seeing SPY kind of drug down. You could see SPY drop, and then you could see the Qs hold a higher weight. They're not really moving in sync right now, which is causing a lot of indecision and choppiness in the markets. Of course, what's different is SPY and Qs have a very small difference in holdings, but overall, those are what kind of separates it from what I watch between the two ETFs. But with the Qs, we saw it get bought up here around 552. You saw it get bought up again here at 559, 560. Of course, if you just want to look at it from a support and resistance perspective, you see how there's a lot of accumulation back here, and as soon as prices dropped back within that range, it got bought back up. Same thing right here. You see a couple of days of consolidation here. You see a 1, 2, 3 retest. Third time it got bought out, and it took out the rest of those shorts and squeezed its way back up to the upside to end the week Friday. So I am looking for a retest of 574, 575 this upcoming week. And it eventually retests these highs here. If we can hold these levels here between 574 and 545, I know it's a big level, but that's just the way I like to look at the market, just so I can be ahead of the game. Smaller time frames for me, or doing TA on smaller time frames, is too much that you have to constantly readjust. The thing about the stock market is, even if you're day trading, even if you're swing trading, you just want to know how to stay in touch with the bigger picture. Because the last thing you want to do is panic when a certain level breaking and you don't know where it's going next. So I like to look at my charts from at least a weekly to a monthly time frame of levels, so that I don't have to keep switching my bias back and forth, back and forth, back and forth. So I'm gonna stay bullish until we break this 545. This is also a support level where I have my game fan lined up at. It lined up here, and we did see a rejection the closer it got to it. Um, but I'm gonna continue to stay bullish until we actually break below this, or we just get a bunch of consecutive days, and I check a bigger time frame, and we close with a different type of candle. You know, a bullish candle. I mean, a bearish candle instead of having a bullish candle. So a retest of 574, 575. We can retest these highs at 581, and the ultimate price target is to see is at 589.57, 55, give or take, which should line up with the fan also. So overall, I do think we can come back down and retest some of these gaps that we've had. We just have to wait on the right type of catalyst, the right type of news that supports the sentiment shift. If we don't get that, then I think I was talking to Mirage where I told him just you keep buying calls until calls don't work no more. Regardless of what you see in the news, the fear mongering, the Kramer stuff, you follow the trend until the break of structure happens. Once you see the break of structure happen, which for me on Qs is below 545, and that's where you see most of the accumulation start. Once we break that, then I can see something, I can consider this price action rolling over on a bigger time frame to start filling gaps that we got to the downside also. So that's my take on the SPY and the QQQ, and why I'm looking at what I'm looking at. We might have to check some red folder events though. Fridge, you got anything on that?
Yeah, dude, we got a couple things coming up this week, believe it or not. Monday isn't anything too crazy. The only thing that might be interesting tomorrow would be new home sales and looking at the real estate market and how it's going to do. But real estate stocks pumped Friday, if I'm not mistaken, because of Jerome Powell being dovish about interest rate cuts in September. Interest rate cuts will be, a good sign for the real estate market because you can borrow money a little bit cheaper to then get into housing. Tuesday, we're looking at probably the bigger one would be consumer confidence from CB, which is at 10 o'clock in the morning. But, it's at 10 in the morning, so it's probably not going to be a huge market mover. Usually the bigger ones are pre-market at 8:30. We got nothing really on Wednesday. Thursday is actually pretty interesting. Thursday, we have GDP actual coming out for Q2. So we'll see how much the GDP changes for the U.S. economy. They are looking at 3%. Last quarter, as we know, was negative 0.5. So having a GDP coming in at 3% would be obviously in line, would be great. We have jobless data also Thursday. So Thursday is one of the bigger heavy hitter ones because you have jobless data, both initial and continuing, and also the GDP of the market, which is a huge thing. And then Friday, which is interesting because usually Friday doesn't have a lot of data points usually. It has PCE data, which the Fed loves to look at for inflation to see where it is, where it's not, how the consumer is spending money. So we have PCE at 8:30. We also have PMI from Chicago at 9:45. And we have Michigan consumer report also at 10 in the morning, which, believe it or not, does actually move markets every once in a while because it's about inflation expectations for the 1 year, for the 5 year, the confidence levels they have, what the consumer's expecting. So a decent week in the market. My thing is that probably the heavy hitters are Thursday into Friday. So Thursday and Friday probably have your big heavy hitting days for economic data from what it looks like right now. But nothing nearly as crazy as last week, at least.
Yeah.
Yeah, the two that I'm really looking towards this week, Fridge, like you were mentioning, is unemployment and then University of Michigan as well. I think those are going to be the two big needle movers.
Yeah, I mean the jobs data is the jobs data has not gotten any better. There's no inflection point. It's not flipping. The jobs market just seems to be getting worse and worse and worse. And that's kind of why I think Jerome Powell was kind of dovish on Friday and was like, oh, we're going to look really closely into a rate cut in September. I think it's because he knows that the data is not showing in his favor for the labor market. And this is what his fear was from a while ago. If the labor market turns over, that's where we're going to see this big change in the markets here. So the fact that he's trying to flip on this one could make a huge difference, I feel like. But, I would love to see the jobs data come in, lower than expected for jobless data. But, so far I have never been convinced otherwise.
Well, just touching on what you're talking about with Powell real quick, because Powell always looks at the larger picture. And we need to remember that, there's a lot of baby boomers that are in that retirement age. And so from what I've been hearing, while employers aren't terminating as many jobs, they're not really hiring people. They're just letting these boomers sort of retire out, and they don't have plans to replace them. So that's another thing that Powell, would definitely be taking into consideration, I would think.
Yeah, and I think one of the things also that, he references a lot, maybe not directly, is the beverage curve that you look at. If you ever look at the beverage curve on anything of historical data based on jobless data, unemployment, and job openings, there's a huge curve that you see that a lot of the, usually trends they follow is like a nice, if unemployment is higher, that means that job openings are lower. If unemployment is lower, job openings is higher. That's usually how it goes. It's like an inversion. But right now we're at this like weird point where unemployment is again relatively low compared to like 8%, it's like 4.2, 4.3, but job openings is also low. It shouldn't be that way. It should be, if unemployment's low, openings should be higher and vice versa. But right now we're at this weird point where unemployment is like low in comparison to what it could be. Also lower. Your jobs.
I know last week actually, and I literally could not get a live person on the phone. It was all AI. Yeah. I was like, this is absolutely ridiculous. And service provider, that's the last time I called them. That's a year and a half. I mean, I had a live person on the phone. Problem,
Hold on, Fish. I think y'all cutting out. Is it cutting out for anybody else in the chat?
Cutting out for me, but I thought it was my internet.
Yeah, it's cutting out a little bit.
Okay.
Oh no, I was thinking that we're cutting out a little bit.
Yeah, things cutting out.
Yeah. But Fish, what we were talking about, right? It was interesting. I was listening to the radio the other day. I know it's a weird thing to listen to the radio still, instead of like Spotify Premium and stuff like that, so I pay for it. I was on the radio the other day, and I heard an advertisement for what's called Open Phone as a company. Open Phone. I thought I heard Open Door for a second, and I was like, whoa, back up here. Open Phone, and what it is apparently is it's a software you can buy where it automatically will answer phone calls for you so you don't miss out on any potential sales. So it's focusing on auto responding and auto dialing people who are calling the office 24/7. Again, why do you need sales reps when you can get this kind of software to do the job for you, answer calls, call people back at all times of the day, 24/7, 365. It's just another example as to where it's potentially going and who's going to be at risk of losing a job right now is, sales reps. Because why do I need to talk to somebody on the phone live when I can just call somebody and use AI software to answer my questions? Hit 1 for this, hit 2 for that. We've been doing it for years, but now it's starting to really generate this idea of like you can have a full-on conversation and probably get things answered just from this AI software and not needing that live person. I love talking to live people, Fish. I know I'm sure you're the same way. I don't like talking to a robotic AI generated thing, but companies don't care what we like. They just want to think about how can I maximize my returns with limiting my costs and my overhead, and AI is the way to do it for a lot of these jobs. So my fiance was telling this crazy story that she read an article about. They had somebody, this is a crazy story, they had somebody who was training in AI software, and then that AI software took their job like as soon as they were done. They just flipped it and just took the job over.
Oh,
Isn't that wild?
That's crazy.
Yeah.
It was a receptionist job, apparently. She told me that. She's like, yeah, it was an article. This receptionist trained an AI software program to do what it was supposed to do. And then once it was good enough, it took the job right over. And now she was unemployed. She got laid off.
Hey,
Yeah,
let that would have been my job. Let me would have trained a AI robot for the company I work for, and you fire me, oh man,
Yeah.
it's over with. I'm tearing the
Mhm.
whole office up.
It's like I also trained it to burn the building down, y'all. So
Yeah, right.
Facts,
I trained it. I trained it to self destruct if I lose my job, and just blows up.
bro.
right.
But that's just
It's
like, I
crazy
mean,
though.
I guess in a way, I mean, I get it. I mean, people train other people to take their jobs all the time. So, I mean,
Yeah.
what make AI any different?
Yeah. But that's kind of like where, like, that's why we're seeing like this job market is tough right now, because you're seeing, like, you look at, even not even looking at the initial jobless claims, which is like just like they just started, being unemployed. You look at continuing ones. You look at, people who've been unemployed for 27 weeks, and that's, you're looking at a lot of time in the market. Like, the numbers are still high. So not only are they initially not having a job, but then they're struggling to find the job long term, and that's the problem that we're seeing with that data. So the jobless data and the labor market data is really crucial. I think Jerome Powell is starting to flip his mindset and saying, yes, inflation is still here. Yes, it is still higher than 2% that we want. But at some point, what is more important, or what has more of a fear in the economy that can impact it negatively? It's either the labor market or it's inflation. And I think right now he's choosing the side of labor market, because the labor market turns over, we hit recessionary periods coming up probably the next 12 months afterwards, if not sooner than that. So I think he's starting to flip his script and saying, you know what, we can take a hit of inflation being a little bit higher for longer, as long as we can hopefully recover our labor market. And he's picking and choosing kind of that side, I feel like, right now. And that's the big flip flop, which is why markets were bullish on Friday. And everything was up over 1%. It was crazy. I was getting notifications across the board about what was up and what was up and what was up,
Facts.
because it just, everything rallied because they were excited to hear it's about rate cuts. So he's starting to get to feel like the labor market is the bigger problem right now, and he's probably going to cut rates for it. And I mean, it is what it is. But it's basically like choosing, like, it's a double-edged sword. But which one's going to kill you? Which one's going to just like hurt you? And I feel like he's trying to choose like the lesser of the two.
Yeah.
Oh yeah.
Were you guys expecting that spike to the upside Friday?
I was not.
I was,
And
yeah, I was not really. I mean, I was at my training for school start opening back up, and my Robinhood thing just kept going off like 10:01. It was just like up 1%, up 3%, up 4%. I was like, dang, dude, like, what did Jerome Powell really say here? Like, come on, man, like, couldn't have been that crazy. But it was just, I mean, it was one of those things where, I think someone said that the implied volatility, the implied move of SPY on Friday was 1%, or about 1% on Friday. So it's either he comes in dovish and we pump 1%, or he comes in hawkish as crap, starts talking about rate hikes, and the market goes down 1% maybe. I don't, I wasn't really surprised by the move. I was glad to hear what his logic was and how he talked about like his looking into rate cuts for September, because obviously rate cuts aren't bullish for market, but it kind of makes us feel like, okay, now we're starting to focus more on the labor market, because the labor market is starting to really show some big holes in it. And I think he's trying to get ahead of that now more than inflation. It sucks, but I think getting ahead of the labor market is going to be a better chance of a softer landing. So I'm happy that he is starting to factor in potential rate cuts into the next FOMC meeting in September. So I'm not really surprised by the move overall, because it was implied to have like a 1% move, but I'm glad my portfolio was able to benefit from it for sure. I'm sure we all are at the end of the day, but
Yeah. I I like that pump. I just would have wished. I wish we would have had that happen Thursday in the closing, and then we could have capitalized on and broke those all time highs Friday. Like, I think that would have been a cleaner move, but of course it ain't about what we want. It's more so
yeah,
about we got to work with what the hell they give us. So just the market
yeah.
being what the market doing what the market does. So
Yeah, and I think we really kind of hit like that point of like we had like what 3 red days in a row.
yeah,
So I think the market was really pricing in like that like negative aspect from Jerome Powell, honestly, because you had 3 straight days of this red selling off, and there was nothing really tell it like causing like that really big sell off, like down like 0.6%, down like 0.5%, down over 1%. I think Nasdaq was at one of the days or whatever. There was nothing really causing it. I think it's just the real fear. And with seeing that, my logic would have been, unless Jerome Powell said something crazy on Friday, didn't really think we are going to go see much more downside because they were really trying to price in like the worst case scenario for Jackson Hole on Friday. So unless he came out and said like we're doing a rate hike in September, I think that would have pushed it down a lot more. But that would have been an extreme case, obviously, for as we all know. But I think the market cap was already starting to price in like the negatives of Jerome Powell's meeting. So when they got that dovish news from him, it just took right back up and it rallied a little bit more. So that's how I looked at it.
Okay. Well, like I said, until the catalyst just really shifts, I just don't. Like I said, I'm gonna just continue to stay bullish until something just pops off and it just changes the whole dynamic. Like I honestly believe in you continue to trade based off of whatever the major catalyst was. So whether it was earnings, whether the company switched something, or, changed anything, I think all the news in between is just it's just noise. So
Yeah.
I agree with you on that. Crypto side, we just saw a little dip on Bitcoin, but it's been bought back up. It hasn't went to hell yet. Right now, 111 seems to be support. Um, Anybody got any takes on crypto? Fishman?
So yeah, right. I'm already jumping in there. So yeah, look, guys, I do think we can see just a touch more downside to like 110 is what I've been seeing as possibilities. They're just trying to shake people out continuously. There's been a lot of talk that BlackRock was selling their Bitcoin. Here's the way I look at that. Why would BlackRock be selling all of their Bitcoin? That doesn't make any sense to me, So maybe they sell some. They're not going to sell out everything, trying to screw with the market. I just think that it's healthy, just trying to shake people out before the next leg up.
Yeah, I think so. Kind of like what you said. I mean, profit taking isn't always, or selling shares isn't always a bad thing. You feel me? Like sometimes it can just be simple, something as simple as a company, just like us retail traders. We take profit. Why not some of these other institutions free up their capital and take profits too? Especially if they're buying in and they're not buying in, the pennies that we pour into Bitcoin. All these people they're dumping in what hundreds of thousands, if not millions of dollars into buying Bitcoin and stuff like that. So when it gets up to a certain level and it consolidates, like we've been watching it trade back and forth between 123 and 111 for since most of July. I mean, if you're up and you're seeing a lot of consolidation, some indecisive areas, I mean, you're gonna take profit too. So, I mean, when a company's selling shares, or I don't think I ever see Michael Saylor. Does he ever sell shares, or he just straight buying everything?
So Michael Saylor has never sold a single Bitcoin, and he says that he never will. Whenever MicroStrategy does quote unquote dilution events where they sell out like convertible bonds or something like that for shares, it's only to purchase more Bitcoin, so it doesn't actually dilute the. In theory, it doesn't actually dilute the company at all. But yeah, to answer your question, no, Michael Saylor hasn't sold a single Bitcoin, and he says that he never will.
It's tough.
So, I will say, I think they did sell, but it was for tax loss harvesting. So it was intentional because there is no wash sales with.
Okay.
No.
Well, then that would be different.
Right. He sold it and then bought it.
Exactly. He's not actually just like, hey, I'm selling my Bitcoin. You know what I mean?
Yeah. I wasn't trying to correct, just saying.
Oh, no.
Tax loss harvesting is a thing in crypto, which is an advantage.
More information is better. You know what I'm saying?
Right,
Yeah, I
right.
wouldn't even think about that kind of thing. I wouldn't even think about there being like tax loss harvesting in terms of like crypto and stuff like that. You don't really think about it until you actually hear it. Like, oh yeah, it makes sense now. Like for me, I'm like, oh, it makes sense. I just never think about selling it at a loss. But yeah, it makes a lot of sense for sure.
Yeah, because there's no wash sale rule. So yeah,
Oh,
it's
so
like
I could just take all my money, buy like Pepe coin, lose it all in like 2 days, and then sell it off, and then buy it again lower and hope for a rebound.
exactly. Yeah, there you go.
You like, hey, I've been down all year anyway, so shit, what the hell?
Buy Pepe every other day, wash sale it every. There's no wash sale, so just tax loss harvest every other day. I'm like Pepe and Shiba Inu and all that.
Man, that take me back. Shiba Inu and those other like, man, that take me
Did y'all
back.
see? Did y'all see the new meme coin that's out right now? You know, Kanye put a new meme coin out. Did you guys see this?
Oh my God, no.
Who was it?
He put out Kanye West put out a meme coin. I made a
Oh
video about it
shit.
over the
What
weekend.
is it?
I got put out next week.
What is it
It's
like? Yeezy
YZY. Yeah,
Yeezy.
YZY coin. Yeezy
Man.
coin.
I
Oh, wow.
didn't
He was
wasn't it a pump and dump though?
Oh,
Definitely.
100%. You know what's crazy? You know what's crazy is that he literally comes out on like it was like earlier last. It was either like earlier this year or last year. He came out and he was like, "Meme coins are so stupid. They take advantage of the fans and blah blah blah." And it's like 3 months later, he's like, "Yeah, Yeezy coin," and then it went up to like a $3 billion market cap. And then just everybody just took so much profit on it. It's down like so much money now. It's unbelievable. It's like 60 cents, and it was like $3 at one point.
Hey, Rock said,
Absolute
"What?
pumping up
What
for it.
Kanye? What Kanye? Hey, that Kanye. The one you just posted, that one.
Oh man.
So the interesting thing though about this though, right, is that so 70% of the circulation supply is owned by like him and his company and his LLC or whatever it is. I don't know the exact behind the scenes for. He wanted 80%, he got 70% of it. So I was like, oh, okay. But he is required under law. I don't know where the law came from, but he's required to hold it for 3 months minimum before taking it out to avoid the rug pulling. But just because he has to hold it doesn't mean other people who might be insiders can't buy it quick and then sell it for a profit. Some guy bought like 500K of it and he sold it like 1.2 million and just pulled it right out from underneath people. So he can't sell it right now, but other people that might be on the inside are able to do it and make money from it.
Yeah, but that would
Exactly.
also tell me expect another pump because Kanye is not going to be left holding the bag.
Oh, absolutely, 100%. But it was funny. He was trying to explain what it was. He was like, "Oh, it's like a decentralized something," and I was like, "All crypto is that, you idiot! What are you talking about? It's all decentralized. That's the whole point of it." And it was about like payment systems, some crap like that. There's like a debit card attached or whatever. And I was like, "Why can't I do Bitcoin? Why can't I do payment methods? Okay, cool. XRP, XLM. You have the USDT stable coins. Like there's the other one, Hedera, I believe is another one that's like a payment one as well, I believe.
Yes.
Like
Yes,
there's so many other top quality cryptos that focus on payment systems that make it so much cheaper at a fraction of the cost. Why would you think that would go to your meme coin of Yeezy coin? Like what in God's green earth would make you do that?
Yeah.
And on Coin Market about it, and they were talking about like predicting it. They were like, because of Kanye's like unethical things that he comes out and says, his unstableness in the markets, we don't know where this is gonna go. And I was like, yep, because he just says whatever the crap he wants to. I feel like so it's wild.
Somebody,
So
somebody
that's
in
I
the
mean,
chat just looked it up. Looked like Rock just posted something.
yeah, he got rug pulled. Yeah, it already did.
Yeah. Well,
But it might pump, like you said, though, Fish. It might get pumped back up, so you can pull out for a profit. You know, I mean,
Right.
It's not a bad thing to think about because you got 3 months. You have take the time it launched, August 20th. Put 3 months onto it. Puts us what, November, September, October, November 20th. Put it on your calendar. See what the price is at November 20th. I'd be curious to see what it's at
Yeah.
before they can put it all out. Get that second rug pull.
a good thing about Bitcoin, I'm still bullish on this. Um,
Yeah.
I'm still bullish on this. Now, the crazy thing, I'm looking at it from a bigger frame, of course, like always. So, right now, is holding this 112, 111 level fairly well. I just marked out this could be the second dip being bought here. So, here was the first one when it first touched around 98 to 99,000. We seen the surge to the upside, which pushed it all the way up to about 123K. So, We're looking at the second retest right now at 112 some, and we've also seen it reject again around 123. So, like I said, I think this could be the second dip if we break below this 112, 111 level and get sucked to the downside. Watch for support around 100K because this is the last time we saw buyers step in consistently. We saw one major dip below the 99,000 and then it spiked to the upside. So if it does break this trend up here at about 113, 112, then I think, anywhere from 101 to 100K would be the next level of support. That's why I got a fan level at. This where I have some support sitting at. Um, I think that'd be the next buy level if you're one of those ones that they like to snatch up fractional shares. I wouldn't mind saying, grab some below 101 if that's your thing. So upside potential, I still got 134 on the map. I think if we can get above this 123, we'll see 128 and above 128.7, then we can see 134, 135. That's still in the sights for right now. When will we get there? No telling. But as long as we maintain this trend above 100, I think we'll be good, and we can just keep holding on for the ride. So, um, let's touch on Nvidia. I think they got earnings right around the corner.
Yeah, Wednesday after hours this week.
Okay,
Nvidia.
Oh,
Wednesday.
Yeah, put on your calendar because SPY's going to move Thursday. Who knows where, but SPY's going to move because NVIDIA has the biggest market share, I believe, of SPY. So,
827.
yeah.
So right now, let's look at Nvidia, and we have a nice little uptrend going. Um, it can easily be broken, but it was bought up around the time that it got back in this bullish area right here. We saw a gap up, and this was back 715. So after the gap up, it retested once, twice, and then again right here. And it's been bought up every single time. So we'll continue to, you know, consider this support until it actually breaks down below this. Possibly we could see it gap down below this, and then that'll be a sentiment shift. But for the most part, it's still healthy. It's still pushing to the upside. This upcoming week, if the market decides it wants to push to the upside, we'll look for a retest of 183, 183.59, 183.55, around that range, simply because it's been a terrible attempt to break over these past couple of times. And this is on a daily time frame. So if you go back and you look at all of these days, this is from July 31st. We saw multiple times attempt to break beyond this 183, and it's constantly been rejecting. It gets dropped, and then buyers step in. They try it again. So we can at least count on 183 contracts, 183 calls going back in the money, or at least getting close to going in the money. If it can get above that and it has a good earnings, this could be the move that breaks it out up to 190 and possibly this 199, 200 level. So overall, I'm still bullish on Nvidia, even if it drops. Let's look at if it drops. It does have an unfilled gap down here, and this is around 149 to 148. So even if it breaks down post ER, I've seen the price action actually break down right before ER, leading all the way up to it. One year I seen it get sucked all the way down to the bottom, um, fill the gap, and then once ER released, it had good earnings, good guidance, rocket right back up to this level right here. Well, not this level, but right back up to the prior levels, and then take off for the rest of the quarter. So I used to like to play earnings, but now it's just kind of a gamble because of the IV, the muted moves. Um, it's just more of a gamble now. So if it drops down before this earnings get reported, I like it. I would say this would be a good dip to buy as far as shares. Remember, earnings is always a gamble. Don't matter if you make it or not. But I think it'd be good to buy shares even if it gets dropped before the earnings report. Um, or if we just consolidate between these levels, we could see the breakout to 199, 200 after report. Overall, I like it. I like it. I'm gonna say that. So, do we have any more interesting earnings reports coming around?
What, real quick, one thing that I just want to say about Nvidia that I mean, it always boggles my mind. You know, they can come out with great numbers, they can come out with great forward guidance, and then come open, the stock has barely moved. You know, or it's gone down because the street expects so much from Nvidia.
Yeah.
You know, so like Royalty said, if you're anytime you're playing it's a bit of a gamble, but be careful with Nvidia. Share it like Royalty said, shares are safe.
And shares aren't bad. I mean, I guess the options market, well, the stock market is so saturated now with the fast money through options. And I was victim of it too for a very long time. I thought, hey, why buy shares when I can make $30, $40 on, options? Shares is just, it's something about buying shares and watching it grow, you know, day over day, week over week. And you just know that at no point in time you're obligated to sell it. You don't have to worry about theta. You don't have to worry about, anything happening to your money is gonna be there. And that's
I would say like,
go
oh no, go
ahead.
ahead, dude. Sorry.
No, go
No,
ahead.
my bad, dude. I was gonna say like the one thing like if you really want to take like that quote unquote like riskier approach, if people like that like good gains, at least you could buy like for example like leverage shares if you really want to take a gamble because at least leverage shares you still have shares but a little bit more of the exposure risk. So I know it's like an NVDL I think is the 2x long Nvidia, so Nvidia pumps 5%, you get 10% returns.
Yeah,
Obviously, leveraged ETFs are more risk, but still I feel like a little bit less risk compared to options because again, you can just buy the shares like you're saying, hold the shares, and then just wait a month, 2 months maybe if you really need to. You can also sell options if you want to get in at lower prices, at least for like leverage shares. So if you want to kind of find like a happy middle ground, I feel like the leverage ones are more risky than actual shares, but less risky relative to options. If that makes sense.
definitely.
That's a great point, Fruit.
Um,
I'd also add, there's ways to do it and have the IV crush benefit you also. So
facts. And I know you will probably come up with a way to dissect it, and get the money out of it either way. But that is a good point too. And that's something I'm probably gonna have to jump into more. Um, because I just see you and I see Fridge, I see ABJ, a couple other people. Y'all benefit, Bob Dog and the whole theta days. They just benefit from the
Mhm.
market in a different way outside of just buying calls.
right.
Yeah. And I mean, a good way also you could do it if you really wanted to is kind of like what I'm doing now with my leap options. You could do the poor man's cover call where you could buy leap options. So if you're bullish in the video long term, you could buy a leap option, like a year out if you really want to, if you have the cash for it, and then just sell cover calls short meantime. And it kind of offsets your actual cost basis, So it's not too bad of a strategy where, say you buy a leap option now and then you sell, right before earnings, you sell a covered call on it and it crashes 5%. Your leap option loses some value, but then that cover call is going to gain a lot, is going to give you a lot of value and also offset your cost basis long term because short term moves are expected. But if you're still bullish long term on Nvidia, a little bit of a pullback isn't the end of the world. So I'm doing that now with leap options. All my leap options right now, I have covered calls on it where you can basically, use the leap options as collateral. And it really kind of helps me kind of offset it in that case as well. Yeah, someone asked about what covered calls are. Basically, if you have 100 shares or more of a company, of a stock, you need at least 100 shares for it, you could sell a call option, which basically allows you to, say, hey, if it hits this price, I will give you my share. So, for example, like NVIDIA's at 178 right now. So you could sell a call option, say, I don't think NVIDIA goes to 190. If it goes to 190, you sell your shares off at a profit. And then the sold option that you create, you get paid the premium as well. So it's passive income in a way because they pay you to sell your shares, but they're also paying you to sell your shares at a higher price. And if it goes down, you still collect the income from the call option that you get. So it's kind of like the basis behind it. Now, the poor man's version of it is if you buy a leap option for it, your leap call option that you bought gives you 100 shares gives you access to 100 shares. So if you are forced to exercise, quote unquote, you just close your leap option instead as the collateral idea as a result of it. So it's a little bit more of a advanced strategy, but definitely can work if you're bullish on stocks long term. On certain stocks, if you're bullish on them, then it definitely can help you out as a result of it. Like I have it right now, and it's nice because it works out. The stock goes up, my leap option goes up. The stock goes down, my cover call offsets my cost basis. So, it's kind of a nice little, game to play to hedge your portfolio, especially in this market here. We don't know what's going to happen next month. We're looking at a rate cut next month, but what is the market going to think about after that happens? Or maybe it doesn't want that anymore. So having that kind of hedge kind of helps out in the long term for sure. If that hopefully answers your question, Art Lives, about covered calls and how it works. It's a good hedge though, for sure.
Do you or Parunga, do either one of y'all have a video posted on you guys' YouTube channel?
Yeah, I got multiples on it. I have one recently about the poor man cover call,
Mhm.
and then I also have one where it's just cover calls 101, where it's just selling options no matter what. I can put them both in the comment section if anyone wants to take a look at them as well. Or if Parunga's got stuff, he can also put it because maybe he explains it better than I do, or vice versa. So you can take and choose whoever it is you want.
Well, definitely if you're in the chat or if you're watching this, check out Fridge Financials and Parunga's YouTube channel. They both post very solid um, educational content on there. So a lot of the questions that you guys may have, you might be able to find it on their sites, on their YouTube channels, and be able to get it. And there you go. They both posted it in the chat right there. Love it.
And then
Mine-
I'll put my cover calls in too, but the poor man's one, I should say.
Mine's just an overview of like different strategies, so it's not like a deep dive or anything. But and then
I'm gonna get with you guys. I'm gonna get with you guys sometime this week or this weekend, and possibly see if we can do like a cover calls class or something like that.
sounds good
Yeah,
to
I
me.
mean, for
I don't
sure.
like cover calls, but sounds good to me.
Yeah, but we probably just need just to have that option available because some people just might hop into it, but I think that'd be something pretty dope that we can be able to drop for the people.
Yeah, let me tell you, dude. Like the poor man's cover call, I've started to experiment and do more research with recently. And if you are an option buyer, like it's great because like I did some math for some of my trades I've done here in my leap options. Like I'll have a leap option that costs me like $1,000 up front, but it expires next June. But then if I sell covered calls every single month for $100, worst case scenario is if I keep doing that for the next 12 months or 10 months, whatever, I'll basically break even. Worst case scenario by selling those poor man cover calls. It limits your upside potential if it shoots through that cover call strike price, but it's a good way to get passive income. And the worst case scenario also is that you can just roll out the options if you feel like you need to. So like for example, I have one on Chipotle right now where I sold one for $100 per premium up front that expires in September 19th. So it's like a monthly, and it's $100 I'm getting. But if it goes to my strike price, overall, if I close both positions, the leap and the covered call one, I would still make like 10, 15% on it in about a month, which is amazing. Obviously, it limits my upside of just my leap option, but it still gives me that kind of, hedging position where it allows me to still be like, oh no, my leap option is down. Oh, cool, my covered call has made me a lot more money. Oh, great. Now I have that cash available. I can go out and buy this and go out and do this, whatever the case is. So it's definitely a good kind of way of basically now kind of seeing how my knowledge of selling options and then now my new knowledge of building and buying options and leaps kind of comes together to kind of create this idea, which could really be beneficial long term. Obviously only time will tell, but it definitely is a interesting strategy to look into, but can definitely have some good benefits. And again, it's a good way to hedge your portfolio. We're not only going to go up. So if it goes down, great. You get money on the cover calls. If it goes up, great. You get money on the leap option, So either way, you're getting some sort of money as the options are moving more and more every single day. So it's kind of nice.
Facts. I love it, man. Hey, that's that. I just want to say I'm happy to have you guys a part of the team, all you guys. But like I said, each one of you guys brings something just different to the table to offer to, anybody that wants to learn how to attack this market. So, like I said, all you guys that's on the stage with me right now, and the people that's in the chat they help out, I appreciate you guys and what all of you guys offer here in the kingdom.
Yeah, man, for sure.
Yeah, I love it.
Let's go look at Marad. What? Rod got
So we have,
his
I know,
name.
Yeah.
so there's PDD ones, and then after you look at that one, there's also Alibaba Friday pre-market as well as another big one. So if you want to look at that one afterwards, that's
I'm gonna
another
check.
one after you do
Yeah, I'm
that
gonna
one.
check that one. This is PDD. I think Rock posted that one. Yeah, earnings before market open tomorrow. Hold
So too
on.
late, probably.
Yeah,
Is
Friday.
there anything else this week? I don't even know.
Oh, Friday.
There's
Okay, it
some
says,
banks.
hey, is PDD one of those ADP stocks?
I believe it might be, or ADRs. Is it?
Yeah, ADR. I mean,
I don't even know, dude. There's so many acronyms these days. I lose track of all my acronyms,
like
honestly.
I know ARM is one,
Yeah, it's
and
an ADR.
okay, so it probably has two different earning dates too.
Yeah, I don't know if they had. Let me take a look and see if there's anything.
I know Rock was saying that it has one coming up, but before market open, and then TradingView has 8/29, so Friday.
Yeah, so that's probably one of those weird ones then. So my guess would be that the U.S. version of earnings is tomorrow because it does say that on Robinhood it's tomorrow pre-market.
Okay.
But if TradingView is saying Friday, then that might be for wherever. Where are they located in? I don't even know.
I think China,
Oh, Dublin,
Dublin. Okay.
Ireland. So that's probably like maybe I'm guessing that's probably maybe their version of their earnings is probably like the Ireland time zone. Maybe I have no idea.
So
Something
so
like
that's
that.
probably traded on LSC then, right?
Most likely, I would say so.
Overall, PDD has had it's been having a pretty good week,
Ooh,
previous week.
look at that chart. Yeah.
So right now it's above 120s, 125 support, and it's only thing that scares me right now is it's just up here by its lonesome. We had a lot of consolidation through here once before, through here, through here, through here. So as you can see before this breakdown right here, each time it actually retested this trend line up here, which over here to be around like 133. Each time it retested over here, it haven't really held too strong. It sold off here, actually gapped down here, and then here you just seen a lot of chop action, and this is on the daily time frame. You've seen a lot of chop action here before it finally sold off. Um, it's just too spotty though. That's the only reason why I probably wouldn't mess with it much. It's just it's so gappy, it's so spotty.
Yeah. Royalty, have you ever played around with the what is it, the Hank and Ashy ones, where it gives you like more of like the average and stuff like that, and it doesn't have like those like spotty areas?
Which one is it?
I can't pronounce it right. Heckin.
Oh, Haikanashi.
Yeah, I can't
Something
pronounce.
like that.
I'm bad with it, but like that one, like to me, like it just cleans the chart up so much nicer because you don't see those random like candles floating. I've never seen a chart like this where just their candles are floating literally in midair.
Yeah,
Like it's wild.
the
Sometimes-
Haikanashi charts are dope. I mean, I used to use those uh, a lot.
I've liked using them
Yeah,
a lot
Haikanashi
better.
is dope.
It gives you a better visual.
That is a lot cleaner than the gap up and gap down.
Yeah.
Um, that one, Haikanashi, and I don't see the other one that I use, but
A few bars.
well, that's what I normally use. And
Yeah.
the reason why is because I just want to see the highs and the lows. Like the body of the candle really
Right.
doesn't matter, but and I use this for an example. So since we are on here, I think somebody had asked me about the Fibonacci levels and how do I place them. So I'll use this chart. Fibonacci levels aren't going to always line up exactly as somebody else versus how you draw because they're marked based off highs and lows. So the high and low that I see might be different from the high and low somebody else sees. I don't draw my Fibonacci's on any time frames below the day. If anything, I'm going daily, monthly, 3 month, um, 3 months, 6 months, 12 months. Because I like to track performance on stock prices in quarters. So I like to look at it from a quarterly perspective, a half the year perspective, and how did it do this year versus last year in order to really just, see what's going on. So with these bar charts, right off top, I see that, all right, last quarter it was bearish. This quarter, we're breaking the previous quarter's highs. So that lets me know, all right, hey, buyers are stepping in. Normally, after you break the high, you might see a small retrace, and then the stock price will take off even higher once it accumulates a little bit. So, kind of like what you see over here. So the stock price broke this quarter's highs, and if we was to go and just break it down on a daily back down here, all right. So I'm assuming that this was that previous quarter's candles. You saw the highs break out. Like I said, once it breaks it, it's gonna come back down, grab a few more buyers before it takes off again. It did it right before earnings, the next earnings, and then you saw the gap up and the price shot up from there. So this is that's what's most important to me is the opening and closing of candles. What is my chart doing? What just happened with that? All right. All right, so right
There.
now you kind of see like this little wedge forming on PUD. If I want to draw fibs, I can draw a swing high here, and then I can draw a swing low here. What that does is that's gonna give me bigger levels to swing trade. Higher time frame give you more solid levels. So once I did that swing high, swing low on the 3 month, then you can zoom in on your daily chart and then you can come and you can see if those levels are respected. Let me get some of these colors out of here. All right, so now that you see what's going on, I don't like to keep the Fibonacci levels up because sometimes I like to overlay different highs and lows. So a lot of the time, this is why you will see me draw like levels like this. So I'll turn that orange. Then you will see this will be green. And then I'll mark out all my buy levels. and then another one orange down there. And then I'll come up here and then I'll mark out some levels up here. Yellow, red. And then I'll get rid of it just so I can kind of keep it simple. Because I might want to come on the monthly. After I get those levels like that, I might come on the monthly chart and I might find another swing high, swing low. And the only reason why you might want to do that is because you want to get closer price targets if you want to go with closer expiration dates. So if you get a swing high, swing low here on the monthly, you zoom in and those levels are going to be a little bit closer together. So then I can go in and this is another overlay of levels. So as I'm charting all of this and drawing it out, getting levels, I'm looking at the pattern that it's in. I'm looking at what my Ganfan levels are. I'm just putting the whole puzzle together. Now, you see some Fibonacci's are going to line up with different swing high, swing lows. We've seen that this is already orange, so that means that was a swing high level that we just marked out, but it's also a 50% level of that 3-month time frame. So that lets me know prices are going to eventually want to come up here at some point because I got 2 different time frames, 2 different swing high, swing lows, and these are falling in confluence with each other. So this will actually be a red line because it's a 50%, 1.5% level on this swing high, swing low. So I'm not putting every swing high, swing low. I'm just putting the ones that I like and that I see on there. So now when I actually go back to like a smaller time frame, a 4-hour or a 30-minute, I got levels. Now it's up to you to interpret when you want to buy it, when it's the right time, because it may consolidate within these levels. It might drop down and you get bigger, gaps, of course, between 121 and 110. But it seems like, PDD seems to like to move like that. So these are how I'm drawing my fib levels. Those are the levels that I like to use. And simple. You find out, you just go and you look and see which levels your eyes like to pick out. If you're a day trader or a scalper, you can do the same thing with the fibs. You can find a swing high and a swing low. So we'll go here, here to here. So, the consolidation is going to be between 2154 and 108. When you start zooming in on a 4-hour, 30-minute, look how beautiful that lines up. Here's your swing high, swing low, rejection at 1.5. You're looking at a rejection here to come back and retest this 1, which was the swing high, retest those lower levels. Either you're going to buy it, it's going to get bought up here, or it's going to start coming down and you're just going to catch the accumulation until it takes out 108. And then here's the rest of your levels that goes up. It gives you perfect strike prices to trade with. So if you're trying to wonder, all right, what strike price do I need to get into? Well, you got 127, which, you can either do a 127 or 128. You can do a 124, 121. These can be puts back down to retest this 121 level. If it comes back down to this 50% level, you know what you're looking for. All right, I'm down here. I want to go out the money. So either I can go and retest 118, 121, 124, 128. Simple. If it shifts, If it breaks below 108.83, then you go back to your daily time frame, and then you find you a new swing high, swing low. So that's just a simple way to use Fibonacci. You don't have to make it hard. I did post a indicator. This is one that I used to use. This one. And then I used to take off. I don't really need the zigzag. You can pick and choose which one of these Fibonacci levels that you want. You can customize the color and everything. You can change the look back period. And then once you do that, it's going to automatically auto adjust the Fibonacci levels off of swing high and swing low. Show my fib levels. Yeah. But this is going to auto adjust based off of, pretty much the highs and the low that it picks out based off the look back period. So this is something, if you just don't want to draw it out, or you don't trust yourself to draw it out quite yet, you can go and look at this app. It's one that I trust. This indicator is one that I trust. Is by Lonesome the Wolf, and he has a pretty dope one. If you follow Trade with Cash, he has a solid one too. I think you get his once the indicator. Once you sign up for his community, I think he logs you in with this, but he has a pretty dope indicator that he wrote too.
Well, see, another thing that I've done, because I use fib levels a lot for more of my like longer dated options. Like, so if I go out to like the weekly chart, for example, I'll do multiple fibs at different swing highs and swing lows, and then kind of see where those levels line up at different points in time, right? So, like, if I have multiple Fibonacci levels lining up in like a certain zone, I'm thinking, okay, there's probably going to be multiple buyers and sellers and a good amount of volume at like this kind of like window here. So like, for example, for me, I did PDD just for my own reference. And on the daily time frame of one of my fibs levels, I have two fib levels or two different fib retracements that I made. And I'm looking at like a pretty decent zone of possible resistance between like 135 and 140 on my levels here. So I've seen people do where they do multiple fib levels, at like the weekly time zone, like you said, for longer dated ones. And it might not be good for the short term, but if you're looking at both doing potential leap options or, long options that are puts instead, having multiple fibs drawn out and you kind of see a lineup of the regions as to like some really good pressure points could be beneficial for you as well because it lines up multiple times, if that makes any sense.
Yeah. That makes perfect sense. And like I said, it's so many different ways that you can actually, mark out your swing high, swing lows. It's, particular levels that everybody likes to shoot for. I don't use the 0.618 level. It's just too close to 50 for me. But a lot of people like that golden pocket between 50 and the 6.18.
That's what I look for usually is the 50 and the 61.8.
Yeah. So I mean, there's nothing wrong with that. I don't. Somebody asked me in the thing, why I don't use that one. It's just because it's just too close to 50. I don't use the 38% level. I use the 23, I use the 50, and I use the 78%. And it's just because the ratios are more evenly distributed. For me to be able
that makes
to look
sense
at
to
it
me.
like
I
that.
get it.
So I don't like averaging down too much, and I don't like having too many levels on there. But like I said, to each his own, and that's what make everybody's trading style a little different because they're able to map it out in different ways and still make money off of it. So here's PDD. Honestly, it's got earnings coming up. I watch it to see how it reacts when it retests 132, 133, and we'll go from there because it's just reestablishing new support up here above 125. So we're just gonna have to see if it's actually held up well enough to stay within these ranges, and if it can get above 132, then we got this nice breakout on this big time frame to where it could actually take off and push all the way back up towards 170. So we just have to watch out for that. Um, you said it was more earnings that we could look at.
Yeah, Baba's a good one this week. Also, they're on a Friday pre-market.
You know,
And a lot of people are watching that one.
I just don't like this stock. It ain't nothing personal. It's just I don't like the way it trades. I just don't like the way it trades.
Well, it's crazy that like it was at one point. I remember when I first started investing like years ago, like back in 2020 COVID times, this thing was pushing $300 a share, like years ago. Yeah, now it's down to like the 120s range, like which is absolutely wild. Which is the same thing with like when I was talking about Stanley last week. Stanley Toolworks was trading at like $200 a share, and it was down to like 70. I was like, dang, dude. So like it's interesting to look back at like share prices of stocks like Alibaba, which was $300 a share. And my guess is probably because of everybody buying things online, wanting to be, wholesalers and to flip profits and to flip things like that. And I think everybody wanted to be on the hype of what is it called, arbitrage or whatever, or not arbitrage, affiliate marketing. I don't know what it is. Drop shipping was the one that people like doing a lot of. So I think a lot of people like loved that kind of time period because they could still make money drop shipping while everybody was locked up during COVID and stuff like that. And I think it became oversaturated, and now Baba had that kind of pullback is what my guess would be. But it's an interesting stock for sure.
Yeah, Baba looks. Gio, I'm glad you're here, man. I was wondering if Gio was gonna make it in here today or not.
Geo.
Gio say the Chinese government can step in at any time, mess it up, and I think that's why I've always been scared to trade, those type of stocks because they only got 5 minutes. Yeah. I think that's why I've always kind of been, kind of nervous about trading those particular stocks is because you just don't know when they're gonna gap up or gap down. We saw it just go on a massive steam run at this point, and then it just gaps down and continues going. So right now, it looks like it's in between a rock and a hard place. Earnings Friday morning.
Yeah, pre-market.
Yeah, so I mean, nice uptrend. As of right now, it looks bullish. Even if we drop down big levels right now between 115 and 105, change of structure be below 96. Well, break of structure be below 96. Um, it looked like it could potentially go up to 153 if it continues to carry this trend that is carrying right now. So how long that could be next year? It could be off a good earnings report, but it's currently in the uptrend right now. So continue to watch that and see how that digests this week. But overall, it looks healthy. Even if it pulls back, it still looks healthy. So here's a nice little
Yeah.
daily trend right here. So here's a nice little trend right there on the daily chart. Um, it looked like it could form a little support right here because it's been rejecting for a good little minute right there, and it gapped up. It's real indecisive, very indecisive. It almost opened and closed at damn near the same price. So it opened at 126.69. It closed at 126.86. So the Bulls barely kept control of it, but it shows some weakness, shows indecisiveness. Volume probably is going to be drying up pretty soon, if it's not already. Kind of like we saw over here, 3 days of just isolation, and then it finally got back down. So, I'm looking at the wrong candle. Yeah. So we're back below 122. So it gapped up, and then we're trading back below here. So we're facing this wall right here back up to 125, 124. If we can set up support back around here, then we should see a retest of these levels right here before the Bulls got screwed over and sent back down to this 118, 117 level. So Baba's just interesting. I said you just gotta, I don't know, stay away from it. That's all I can say. Unless you just got a real solid position, I'll stay away from it.
I'm with you there, man. I stay away from Chinese stocks. Just something about them. I've never had good luck.
What about Neo? I know everybody's
Well,
been. I know a lot
I
of
guess
people's been.
I guess I eat my words.
So this was something that I was posted on after I was a little bit, and I posted it in my Lurch channel too. We saw a nice, little setup here before it finally broke out, and it's oversold for me right now. I mean, overbought right now for me. I think we're approaching this zone right here, and this is where we saw a lot of selling pressure and consolidation at last time. So if it does get up here, I would definitely pull profits out if you start seeing price above $7. I'm a little weary with it being above this 612, 610 level, just because there are some gaps on the lower frames. Earnings is okay, September 2nd. So, man, this can be tricky, honestly. This could be the pre-ER run up. Let me see the second. That's Monday or Tuesday. I think it's one of those days.
Second's a Tuesday.
I think that would be Tuesday.
Second's
Yeah,
Tuesday.
so this could possibly be pricing in the earnings momentum going into this, or we could see the flush back down to fill these gaps, and then it gets bought back up, and earnings pushes it back up here. Those are the two scenarios that I'll be watching, just because I'm already kind of weary of it being this high and going this fast. The closer they get to earnings, I just kind of watch which way the sentiment is, see if it comes back down and retest its 565 level, and just see how it handles right here. I wouldn't buy anything up here. I would wait till at least it retests here, see if this holds up, and go from there. Because it just went up too fast, honestly. Yeah. And I think I posted the due diligence around here, somewhere around here, this candle or this candle. So if you got in around here, I mean, you should have a good profits at this point. So don't be greedy, because that's how you end up regretting stuff. Um, I think we had some more charts. Do y'all have anything y'all want to look at? While
I
we
got Dollar General. I think will be interesting to watch more for retail purposes,
DG.
because Dollar General, I feel like Dollar General would thrive in a bad market in terms of like spending, because if people gotta buy necessities, but
Hmm.
their inflation's too high, you're thinking that Dollar General might be the place people will fly to, usually those dollar stores.
So we're looking
So
at
that
cost
watch.
efficient,
Yeah, that's
and
my one pick for the week I would look at.
and this would be good. It'll thrive, like you said, inflationary. An inflationary hedge. I think this would do
Hmm.
good. Um, Recessionary talks. I think Dollar General would do good.
Yeah, they've been getting killed on the market though. I know they were over like $200 at one point, close to
Definitely.
300, I think. And now
And
they're
that's,
down. Yeah,
I think that was pre-COVID though. Well, post-COVID though.
post COVID. Yeah,
Yeah.
that was when
Um,
interest rates super high. Yeah, those high interest rates up in 2022. And then I don't know if it was like maybe because I don't know what it is. I don't know what could have caused this huge reversal in Dollar General, because you see Dollar Generals like they're like everywhere. Like it's not like they're like, fast and few. Like, there's so many of them. Like you go to down the street, you go around the block, you go anywhere in your city, in your town, you'll probably find at least one Dollar General store, I would think. So they have a lot of exposure there, but I just wonder, I'm just looking at it and being like, why is it that's had so much of a pullback recently in terms of, maybe it's been their guidance or what, but, I feel like if people are freaking out about spending and inflationary, pressures from the markets, Dollar General is where you go for, your, utensils or for whatever, if you want to just make it by until a rebound
Well,
in the market.
it's definitely at a real nice pivotal point right here. Um, this is kind of one of those Adobe type situations.
Right.
All right.
I, I think I remember that it was Dollar General, and or it was I can't remember if it was Dollar General or Dollar Tree, but I think it was Dollar General that was closing some stores earlier in the year.
I want to say it might have been Dollar Tree.
It might have been Dollar Tree. Okay, thank you.
And Dollar Tree,
They both,
hey,
they
Dollar
both
Tree,
got a little bit.
yeah. So let's see. So I think the fact that this is the only gap showing on the monthly lets me know that it's gonna come back up. So the daily shows this. It's got two gap downs. Well, it's retested two of the three gap downs that it's showing on the daily chart. So it's retested this, and it's partially retesting this previous one. The price actions are kind of getting chewed both ways. We saw prices get bought up between 97 and 64. That happened in a span of 2 months, 3 months. So this was a move that it took a quarter for it to actually get bought up. And now we're seeing the rebound. So prices are getting chewed up right now between 122 and 96, $97. So um
It'll also be interesting to see them because, you had Target earnings last week, which were not good. You had Walmart earnings last week, which were also not good for forward guidance. So now it's like, does Dollar General follow suit in terms of that? I think Target's like getting rid of their CEO stepping down. And then by the end of the year, or early next year, Walmart's guidance, I think, was cut down, I believe, potentially. But now it's like, okay, nothing but Dollar General, like they're a pretty big retail company. They're not like one of those like small, like mom and pop ones. Like they have thousands of stores, I'm pretty sure, across the country at least.
I
So
like
seeing how they do after Walmart and Target will be interesting to watch.
I
I
like
think
it.
Geo means tariffs, not tires.
I,
I think.
long term, I like it though. All right.
Yeah.
The reason why I say that, this 3 month candle right here, big bullish engulfing candle right there. That's a nice two candle setup, which led to a successful quarter after that. So right now, we're looking at a nice 6 month candle here. If we put, this 3 months and this 3 months, we're looking at a nice 6 months of price increases. And then just this quarter, we could be seeing just a potential cool down, a little breather. But I like this bullish engulfing. Bullish until this is taken out, which is 66.57. If you can catch it in the dip, I think this would be a good opportunity to maybe load up on some Dollar General.
I don't see them really as a stock I don't see them as a company going out, because everybody loves going to buy cheaper price items no matter where you go, right? Like if you could buy cheap items that are $1.25 at Dollar General compared to buying on Amazon or going to, into your local grocery store and it's cheaper at Dollar General, then why not? Like I don't see them as a company that just comes down and goes out of business. I can't see it. I mean, they're selling stuff on super, super cheap prices.
I
Like
go
how
to
could you
Dollar,
not?
bro. I hit Dollar General once a day. It's like, bro, it's It's like 2 minutes away from my house. It's like I get to Dollar General before I hit Walmart. So
See,
they not
there you
losing.
go.
They not losing no business over here.
No.
Geo say tires are affecting as tires.
I think he means
Yeah.
tariffs.
Oh, tariffs,
Okay.
tariffs.
I think he means tariffs.
He's
Okay.
working.
what I would
Yeah.
So it's
Yeah,
gotta
because
be.
tariffs are going to impact their shipping and stuff like that for sure.
That's why I was like, tires. Like, what the hell are you talking about?
Well, to be fair though, like Dollar General sells they sell some weird stuff sometimes. It's not just a dollar only stuff. Like they sell like speakers for like $25. I saw clothes at mine at one point. And I was like, all right,
Wow.
dude. Like they don't just sell things for $1. Dollar Tree is the one that's like $1.25 for everything in the store. Dollar General has everything from like $1 to like $20, but a majority of their stuff is $1. So they kind of try to play the market, I think, in that way, where it's not just $1.25 or $1 whatever. You can buy speakers, you can buy 12 packs of soda for cheaper, you can buy clothes for cheaper if you want to. It's not like probably maybe top quality that you're buying, but if you need a shirt for a couple months, go to Dollar Tree and buy one for like $10. Like, why not?
Right.
I think this earnings coming around with Dollar Tree is either gonna get it out of this crunch zone, or it's gonna push it
Yeah.
up for more buyers to step in for the next quarter. Because
Yeah, I wouldn't mind. I wouldn't mind looking at a leap option if it pulls back after earnings. Honestly.
and the only reason why I say that is because it retested this level right here after so long. So here we are. The last time it was just in these levels right here was 2015, 2016, 2017. So, I mean, we're looking at a long time since it's retested these levels. So
Mhm.
I wouldn't be surprised if it just gave it one more try just to make sure, institutions can load up for something. Because inflation, recession, I don't know if all that talk is out the window completely, but this would be an opportunity for institutions to hop in while everything is
Right.
kind of under the radar, and then if the market goes to the the downside again, I don't want to just say that it's gonna crash, but something could come of Dollar General.
If I had to guess earnings and really throw like a literally like shot in the dark for this one, I think they're going to talk about tariffs impacting their shipping and their and their guidance and stuff like that. I think it's going to probably. I feel like the earnings are probably going to be okay, but I feel like it's going to be their guidance. It's going to get slashed, kind of like Walmart. Walmart got hit with their guidance; they were down like 4%, I think, at one point. I think they might beat on earnings, and then I think they're going to say something about tariffs and about shipping costs and stuff like that, and I feel like it's gonna get a pullback. That's just my personal belief right now, based off of what Target and Walmart did after their earnings reports. Because I still feel like these guys fall into like those kind of companies. Like they're not like it's not like it's like a their market cap. I don't know what it is, but I mean I think it's definitely gonna be one of those things where they would definitely feel that. I could probably tell you what the market cap is for Dollar General. It is 25 billion. Target is definitely a lot more than that. Target's 45 billion, and Walmart's like the heavy hitter. I know, 700 billion. Yeah, but they didn't like. And even though we had that huge green day on Friday, Walmart was down 1% on the day, even though we still had that huge push because they just didn't like their earnings. It was whatever was said in their earnings. They just nobody liked it. I think it was again like they cut guidance and just or whatever the possibility was, and just they just don't like it. Some people put their price targets on them.
Bro, look at it. Walmart's getting crushed.
Yeah.
So as part of Walmart's guidance, they were saying how they were going to pass some of tariffs on to the consumer, but that they would eat some tariff as well. And so I'm sure that their shareholders don't like that, because that means less profit for the company.
Yeah, and maybe even less shoppers overall.
Exactly.
Because if you're telling me that I'm going to be paying more, I'm not going to Walmart anymore. Why would I do that?
Right. So it's.
I'm still taking my ass to Walmart. I'm still going to Walmart.
We gotta have the royalty trades indicator. We have all these different indicators. The royalty trades ones: the Dollar General, Walmart. I don't know what else royalty uses every single day. UPS is the rival. UPS is the rival to USPS, so maybe use UPS as well. So we're bearish on UPS maybe or Amazon or whatever. Like we gotta make the royalty trades like indicator, like index.
I've been
I'm a firm believer of using what you see and use in your life every day. And I was away for the weekend, and I was passing over the Chesapeake Bay, and when I was heading out, the shipping lanes were busy, and then when I was coming back, even though I was coming back on a Sunday and it should be empty, I still saw 3 ships in the shipping lane heading towards Baltimore. So that's good. That means commerce is alive and kicking.
okay. I got Webull up right now. Take a look at that.
Let's go.
How'd their earnings do? I didn't really read much into
Oh,
it.
they're this week. They're the 28th.
I thought they were last week. I don't know why.
Well, you're wrong.
Hey man. All right, Brunga. That's all right. I'm gonna remember that.
I'm still solid on Webull. I did alert some share buying here below 1450, and it recovered nicely. So, anybody that bought that dip, you should be up at least green for the day of Friday because it was bought up rather quickly. So overall, I still got an overall price target of 21.55. I like it. Not because it's just, it's Webull. I think that I might be a little bit more biased because Webull was the first like broker that I just really just jumped on because it had the charts integrated already and I could do TA and learn it. But I think my honest opinion, this big gap up right here after the IPO, this big gap up right here lets me know that it can get to 26 easily if it wanted to. And then it has a high of 79 right now. So if you're buying in right now, if you're in shares, if you're in leaps, and you're buying this right now to out to 2027 or whatnot, I think that this would be a pretty good buy and hold with just the record of where it's been at one point in time. Not saying it's gonna get there overnight, but I don't see Webull broker going anywhere. And it has paper trading on there. It has all type of stuff. So Webull is gonna eventually climb. My next price target is around like 21, 22. And then from there, I mean, we just see how that reclaims those levels once it does reach. But anything under 1450 on Webull, I say buy. I think if it touches back around this 1150 to $10 range that we saw very briefly over here, I say that'd be more of a discount too. So continue to buy those shares in Webull. That'd be a good place to really set up like a foundation for your account. Accumulate, allow it to grow, and this would be something that you'll be able to talk about in a couple of years. If you bought Palantir, you bought Hood, and you got those super low DCA levels, Hood can be one of the next ones too. One of my things that I've been looking at is a lot of IPO stocks that's came out over the past year or so, and that's because they're under $100. So when these all-time highs in the Mag 7 starts to pull back and they start taking profits on some of these 200, 300, 500, $700 stocks, guess where the money's probably going to flow into? The cheaper stocks. The stocks that's, like HP that's sitting at $22. Probably companies like Ouster that's sitting at 30. If you follow Stock Pocket, RKT, he loves it. It's at $19. So even Arrow, this is something that I posted. As we can see, it's been accumulating between 22 and 24 as of recently. It IPO back in June, so it's still fairly new. It's sitting at $24. If it drops below these lows, I say snatch up more. But when a lot of these expensive stocks are going to start want to take profits, and the institutions start selling off, the money is going to have to go into somewhere that has more potential to grow and make better returns than some of your big heavy hitters. So these are some of the ones that I'm looking at. Chime Financial. This is something I've been buying. I use Chime. You get paid what it is. I think up to 3 or 4 days early. They can help you build your credit. They have a savings. Um, they have an overdraft system. It's a lot of things just from being a user of Chime Financials so that I can say I don't see this company going nowhere anytime soon. And because it's so cheap right now, this is something that you could be accumulating and buying shares of before before all the big institutions start loading up money into it. I mean, looking at the last earnings, it's actually, green on the earnings and on the revenue. So definitely start looking at companies where a lot of institutions aren't just loading up money into and that they're fairly cheap. Because once you start seeing a lot of these big names start getting money pulled out of it, it's going to have to go into somewhere else. So you just got to kind of follow the rotation of the market and go from there. So ExxonMobil, I kind of been watching oil and gas. This is kind of a similar setup from, I'm trying to go back and remember where I just seen this at. Neo. So we go back and look at Neo. We kind of saw the same little breakout that we were watching on Exxon. It's on a bigger time frame, but if it sets up above here, then we could see another breakout. It's a lot of sellers in this range, but if it gaps up here, we could see some price consolidation in between this 118. Um, yeah, so if we see it break out, we could see some consolidation in between here to fill this gap to the upside. But overall, if something was to happen dramatic to where it caused oil spices to spike, then I'm looking at 125. You already seen a nice floor on Exxon down here. It breaks occasionally, but it always gets bounced back up below $102. Last time we seen this was in 2023. You saw the prices break down, and that was probably one of the greatest, step-ins that we've seen on Exxon in a while. It dropped here, it got bought up. The next thing you know, it skyrockets up to 122. And this happened in a span of, let me see, this is February, this is April. So in the span of 2 months, we watched Exxon go from $100 to $122. $22 move. So that means you buy some contracts 3 months, 6 months out. Let's say if Exxon does break down, you can sit on those and you can see a dramatic increase. I think those contracts move like $50 on a dollar if you get close enough, and they're not very expensive. So definitely keep this on your watch. I'm gonna keep it on there. If we break out of this little pattern right here, at least look for a push up to 118. You got a lot of accumulation right here on this side. So it could set up like another little wing on this side before it decides to move on its way up. And watch this support set up around like the mid 112s to make the next move up. So this will also probably be a something you can see money rotate into once technology decides to cool down also. Especially since a lot of that, I haven't heard a lot of the talking, overseas and stuff. It sound like it's kind of cooled down some. So, Johnson and Johnson, they've been doing good. Eli Lilly, let's look at that. And anybody else on stage, if y'all guys have anything y'all want to jump into, y'all want to share, just let me know. I'm just scrolling through charts right now, just kind of drawing focus to, anything.
I wanted to pull up UPST, if you don't mind. I like upstart loans, especially with the Fed coming in and talking about interest rates possibly going lower. I like upstart loans. I've used them in the past, so as a consumer, they're very easy to use. They help build credit. Um, they're a good recessionary play, I think. I also think that they're a good trade for non-recession times. Because in recession, yeah, people are gonna take loans, right? And Upstart tends to help people with credit scores that banks won't loan to. At the same time, when times are good, people want to be spending, and so they're more willing to take a loan that they can pay back later. So I just like Upstart.
Okay. And it looks healthy. I ain't gonna lie to you. It looks very, very healthy. So, um, I'm going through the frames right now just to see what, if anything, stands out.
Like I know that it's one that I was following, and then I looked away for I don't know maybe like a month or a month and a half, and it like jumped up, and I was like, oh wow, okay, there it goes. And that was a while ago. Um,
So it
but yeah, I
IPO,
mean,
it IPO post COVID, so 2020, and we saw highs as far as did it really reach $400 or did it has it split or something at one point in time?
I don't know. Here, let me. I honestly don't know. Let me ask ChatGPT. See what Chat can tell me.
Well, I mean the candles look like it pushed that high, 401, and 2021 it started melting back to the downside. So this could be something that'll be a solid investment in long term.
Yeah, I mean, yeah, this isn't showing me anything.
We're just gonna go off the charts then, fuck it, and go from what it shows us. So as of right now, looks like it's finna attempt to reclaim this $70 level, 70.71. So so a nice little breakout right there. Here's some consolidation. So you want to see if it maintains above 62. If I had to say where it's going to head to next, there you go. Oh, that little consolidation looks solid and up there. So this whole little zone right here looks solid. If it can reclaim 71, then you can do it like that. If you was to do a swing high, swing low with the fibs, you can mark it out like that. And I ain't perfect, but my levels of consolidation and price targets are pretty close to a swing high, swing low right here. I'm probably like maybe $1 off or a couple of cents off.
That's beautiful, man. It's amazing how your chart's line up. It's crazy.
I just look for as much confluence as I possibly can. So as far as the swing high, swing low, it'll be bullish above $60.66. We're looking at 74, and that's prices should be able to build above this 50% level. Once it breaks these highs, then we'll look for $100. And that's if this swing high, swing low continues to, you know, stay intact. So if you wanted to go out the money, strike price, further out expiration date, you have your strike prices right here. So if you wanted to conserve money, the balance is the further out the money you go, the longer time you put on the contract because you are already sacrificing paying top dollar for time. So if you're going closer in the money, then you can afford to go with that shorter expiration date because you're already paying a lot more to catch that $74 strike price and let it go in the money. You know, that's closer to where it's at right now. But if you're gonna go for the retest of $87 and you already set your alerts for this $60 level, say this alert goes off, then that's your stop loss. That's another way to set your stop loss if you don't want to go with the 20%, 25%. You'll be able to set your alerts right here. Once it breaks, then you know to sell. But if it never hits, you can pretty much never open your app, or never open your charts, and you will just know my $74 alert hit, my $81 alert hit, $87 alert hit. And you only time you're opening your brokerage is either to take a trade or to exit a trade. And that's how you make yourself into an algo trader, you know, in your own way. You cut down on screen time, you cut down on stress. It's so many good perks come in with just setting alerts, setting your levels, knowing how to exit, knowing when to enter, and not constantly just watching your charts. So with UPST fish, $87 should be the retest for the swing high. That's a good strike. And if you just want to go further out the money, $100 would be my strike price that you probably can go long. It just had earnings. It looked good. So I don't see a reason why this shouldn't go up a little more.
Love it. Love it. Thank you. Appreciate that, Royalty.
No problemo. Anybody else got anything they want looked at?
I do not.
Costco been getting work. Costco. Okay. Well, I think we done held them pretty good here. Let's see, look at the time. So we're right at the 2 hour mark, hour and 58 minutes. That was dope. Well, we're gonna start wrapping it up here. We done looked at some charts. We done talked about option strategy with covered calls and crypto, Bitcoin, all that good stuff. Be on the lookout for. I'm gonna make myself do it. Pre-market analysis in the morning on my page. So we're gonna get back to those daily levels, and we're gonna jump back in like that. Anything that y'all want to pass on to the family going into the week? Anybody? Any encouraging words?
I mean, for me personally, I think it's more of just keep doing research. Honestly, long story short, the more you research, the more you understand. The more you understand, the better off you're going to be. So keep researching stocks. You look into their financials. If you're bullish on them, look into what they're doing. If they're expanding their companies, look at the economy overall. Look at every single data point you possibly can. I made this point basically because there was somebody on Wall Street Bets, believe it or not, who was like, I made like $9,000. I didn't know Jerome Powell was speaking on Friday. I was like, how do you not know that? I don't know how you don't know that when everyone's been talking about this for the last like 2 weeks. So honestly, if you just take the time to bookmark an economic calendar, I use Bloomberg, other people use different ones. Staying up to date with economic data and stock markets, and earnings reports, stuff like that really helps you develop a better, trending, a better trading, thesis for things. So that's what my advice would be. Just the more you research, the better off you will be.
Agreed. Yeah, no, I mean, and just to piggyback off Fridge, if you can, just take 2 seconds out of your morning before the market opens and see what happened overnight, as far as any particulars that you're interested in. That way you're not opening your portfolio at market open going, oh my God, wait a minute, I didn't know that it went up or down or that the market was going to do this or, X, Y, or Z happened. You've already sort of mentally prepared for which direction you're going to be going.
Yeah.
Good. Anything, bro?
Yeah, I'd say just, continue to keep it small. And like we talked about, like it's hard not to be bullish right now, but, maybe it's okay to have some bearish trades out there to balance it out or neutral ones.
Definitely.
And I'd say also I've seen some people talk about like, well, I'm not really following the alerts because I don't know exactly what's going on. And that's very good. Definitely don't blindly follow if you don't know what's going on, but ask us. I mean, a lot of us are available to answer the questions if you want to know what's going on.
Facts. And if I just had to capitalize on anything, definitely do your due diligence, do your research. If you're already a part of the kingdom, you got the kingdom you. I just went through there yesterday and posted, just an open forum on charts, on breakthroughs. If you want something looked at, I do it all the time. I go through, I'll chart it, I'll break it down, I give you buying points, selling points. And honestly, I don't care whether a person is a diehard buyer or not. If the chart looks good and it tells me, hey, we going up or we going down, I'm gonna tell you, this is what it says. And I can't be biased on, on what you like. So, you definitely use the kingdom view to your advantage. Ask questions, develop, make money. That's what we're here for. So I appreciate everybody for tapping in to the Kingdom Podcast. Thank y'all for giving us a little bit of time in your Sundays, and we'll catch y'all in a little bit.
Peace.
Peace.
Peace out.
Okay.